we're going to talk about the future of fintech, which seems a very obvious subject, but it's something that I'm pretty certain every single person in this room is a subject very near and dear to their hearts. So to start off with you guys, let's just set a few sort of wee parameters. How would you really define, first of all, what fintech and what insurtech is? I mean, has it been around since the 70s? How would you really define it, first of all?
You want to have a go?
No, you can start.
Okay. Well, we were having this discussion earlier. Very often, people are separating the two just for convenience reasons. But of course, others would say that fintech relates primarily to banking and banking type of activities, and insurtech to insurance type of activities. But of course, these sectors are converging, and you have an integration of one into the other. So I think what will make the difference is maybe not the definition and the difference between the two, but what is creating this convergence. And one of the aspects we are going to discuss later is around data, and how the data economy is really pervasive and influencing the different sectors and converging the different sectors. So you can either have a very broad definition of fintech, saying fintech is everything which correspond to banking, payments, and insurance, or you can separate the two. But I think it's quite an artificial separation. Magda, I don't know, what do you think?
I think that the simplest thing we can say that fintech and insurtech are traditional sectors put to work together with modern technology. Basically, that's it. It's financial and insurance technology. But I would say that fintech, it's a rather narrow view, and I can see the future of this specific sector more broad. I mean, in the broader perspective, because I believe fintech is a part of transactional innovation or transactional technology. And fintech relates to money, as my colleague already said. It's payments, it's all of this financial value transfer. But it's just a starting point, I believe.
And if I may add something, you can see that both in developed and emerging countries, for instance, in Africa, you have a lot of products and services that combine different aspects, where you have a bit that is related to fundraising and crowdfunding, using payment platforms, but also including micro-insurance, for instance. Yeah. So this is really a good example of all these sectors being completely embedded and converging.
One thing about this sector, I saw one of those very sort of cliched LinkedIn posts with the infographic of what fintech, insurtech, regtech is doing. It's enabling technology that is removing a barrier to entry. So you can now have companies like, well, you're very familiar with the guys at Loot, who 20 years ago would not be able to be doing what they're doing now because that technology is available.
Well, for those who don't know, I'm going to do a terrible commercial plug. Loot is a company I'm mentoring. It's a mobile bank for students and millennials. Part of the team is actually based in Poznan, so there is an important Polish connection there. To be honest, their technology is not particularly innovative or new. What really makes the difference with Loot and other companies with the traditional banks is that they're offering a customer experience which is unique. Banks cannot offer a customer experience that corresponds to one particular customer segment requirements, for instance, the millennials or the students, because they have to offer general category of products, very often because of regulation, but not only because of the structure of the business, the banking business model. What these startups are doing, and our president speaker was actually hinting to that, is to disaggregate, to maybe do only one thing, but they do it much better than the traditional bank, because they have what really characterizes these new companies is really the flexibility and the customer experience, which is unique and really corresponding to what the customer and each type of customer wants. And to finish on that, actually what's really interesting in the development is to see that one of the important development in payments, for instance, is to see you have where the competition is really starting to bite the bank on the transversal payment systems to one type of vertical industry verticals, for instance, transportation, or to certain type of customers, for instance, millennials. So this is where the competition is really starting to bite the bank, addressing better one customer segment. But their technology, even if it's very good, is not necessarily revolutionary.
What I think is also worth pointing is that fintech and other modern value transfer technologies are basically decentralizing the traditional model of doing value transfer, so centralized one. And many fintech startups and insurtech startups, they are based on a P2P model, so peer-to-peer. And I think that's a very interesting observation we can make, that this centralized model of offering financial and other services based on money proves to be inefficient in very, very complex, and I mean, technology is so complicated today that we can no longer fake that we understand everything. And in this entropy of technology, we need to decentralize. And this fintech thing does this, and I think it's important aspect.
Absolutely.
Have you got a good example for a decentralized within financial services?
Excuse me?
Have you got a good example of a financial service?
It's like peer-to-peer lending, for instance, or peer-to-peer insurance. We saw yesterday peer-to-peer insurance startup Kundi, which is also my point from this commercial side, because Kundi is one of my startups from Startup Weekend Warsaw. We do this initiative for 5 years now. So Kundi is our startup. But it basically it translates to lower operational cost, because it's being done between peers, like people. So social lending, peer-to-peer lending, all of these decentralized money protocols like Bitcoin, for example, it's also peer-to-peer. So we started with torrents ages ago, and now we are seeing the money protocols of the future appearing. So. And they are peer-to-peer, like decentralized.
Yeah, you have a new company called Abra, for instance, that is a peer-to-peer payment system network developing in the US and Philippines for the moment, which is really a peer-to-peer system. But crowdfunding is a good example also, and peer-to-peer lending of how these things work. And there is we were having a discussion, there is a really interesting aspect, which is that in a way, this digital technologies and digital innovation is kind of bringing us back to the 19th century. When you talk about insurance, peer-to-peer insurance, one of the things, there is a company called Inspire in France, which is a peer-to-peer insurer that complete your coverage when the insurer doesn't want to cover you for X or Y reasons because you have a specific disease. For instance, the peer-to-peer network is becoming kind of a mutual fraternal company, like in the 19th century. So you see all these developments actually arcing back to things that were existent in the 19th century, which I find really interesting. But I think there is one dimension in terms of the future of fintech, which is really, really important, and it's the fact that digital is transforming the business models, both of banking and insurance. And when you start to combine digital technologies with things like Internet of Things, like sensors, like smart devices, wearables, you reach a point where the model, for instance, for insurance that was up to now based on covering the result of a damage is going to be increasingly mutating, going towards the risk management and preventing the risk, and whether it is the healthcare risk or the water leak risk or whatever. And this is what digital technologies are allowing to really change the business model, which of course for the incumbent banks and insurers is a real issue. And I want to finish on that before giving the floor to Magda. what is really what the people needs to understand, and very often banks, incumbent banks, don't understand that, is that digital is not just another channel. If you really want to do digital transformation seriously, you have to consider transforming from scratch your business model. That's why it's so difficult, actually.
Okay, with that in mind, we've heard a lot about digital technologies over the last sort of 10 years or so. Just to catch you slightly off guard, the physical side of things, where do you see actually the role of the bank branch and seeing sort of physical bank branding on ATMs and the like? Do you see that sort of having a solid place in the future?
What is a bank branch? Your supermarket is a bank branch. In Africa, agents, local bakeries are bank branches. Okay. So I think you have a kind of decentralization of what is a bank branch.
I think that millennials, they don't need to get in touch with humans to settle their relations between banks and themselves. So they don't need humans, basically, and prefer to communicate via text. And I fully understand, because I'm one of them.
I don't fully agree with you, Magda, respectfully on that. Okay. I think actually they want to have human interaction, but they don't necessarily want them in a bank branch, which is different.
I'm going to disagree with both of you. I think we still need to have that physical presence on the high street, not to walk in, but because it's interesting you mentioned millennials, because in my office, almost everyone is under the age of 24, and everyone has got a mixture of banks, of sort of the incumbents as well as one of the new ones. And the reason they stick with some of the old ones is because they don't trust the banking system and they want to be able to see it.
It's another thing. I mean, the mistrust, or the young people don't trust in traditional financial and traditional sources of trust, because banks is just one of the sources. It's another thing, and that's what we see. I like to relate to the data, because data is very important in digital economy, as business models are based mostly on data. But the stack, I mean the business models in digital economy are built on data, but basically the protocols are ways of transferring data. So protocols are the thin layer, and most of the innovation happens on top, on the application layer. So we've got thin protocol layer and fat application layer. What we're starting to see, it's the transformation to crypto economy, so cryptographically secured finance, value transfer, and other things. That's another way around. So we see the PAT protocols, like monetizing the protocol directly, protocol as a business model, and thin application layer, which translates mostly to API. Absolutely. So that's the change. I mean, we are not fully transformed into digital, and now we are pushed into crypto, and I think that crypto is basically the future of fintech. So cryptographically secured transfer of value online.
I agree with you on that, and actually I think what a second aspect of that is really the data, and how the data are becoming an asset class in themselves. When you talk about value and data can even become a form of currency. Mm-hmm. So all the questions around what is money, what is a currency, are going to be increasingly important, and it's to get back to my panel earlier, it's a very sensitive issue for regulators and central banks to start really thinking about, okay, what is money? What is a currency? A person is almost becoming a currency. Data about a person is becoming a currency. You can exchange it. You can be rewarded for the exchange. You can receive a counterpart to selling your data. So that's one aspect. Data also very importantly, and I see that with some of the startups I'm working with, one very important aspect is the fact that we are going into an environment where the control over the data is really, really crucial. And giving back control to the customer, to the user of their data, is going to be one of the competitive dimension where startups could really start to create problems for the incumbents, whether they are banks, insurers, or others, actually. It's not just them, mobile operators and others. One of the startups I'm working with in the UK is called Mobility, and they give back control to their user over their financial data to help them save money on their recurring bills like utilities, energy, telecoms, etc. And they do that by having a model also that compares the best offers based not on being commissioned by the providers, but on being paid by the user to do that. So they are totally objective. Creating a new dimension of trust, confidence for the user in the way their data are handled, and transparency are absolutely three key elements for startup if they want to compete with the banks. And I will conclude on that. Yeah. It's also an opportunity for the incumbent players, if they understand that correctly, to actually be much more than a bank for their users. They can re-establish trust with their customer by being a kind of guide in the digital economy and help the customer spot the best opportunities for them, for their customers.
Well, Magda, in terms of obviously you guys, what's sort of your view on consumer trust for data?
I think that current business model, the richest companies today are exploiting our data, users' data, so they live from not theirs data, and I think it's a big time to change. Room for improvement, so to say. And I think that all of this crypto transformation has a big promise in returning the rights to the data to their owners, especially if we consider that we are starting monetizing the protocols. And if we monetize the protocol, then we can return the data to their owners. So I believe this is one of the steps. And another thing, if we consider this algorithmic trust within protocols, because all of those newly emerging protocols, they are secured cryptographically, and basically they translate to an algorithmic trust 2.0, so the next generation of trust. And having this at the protocol layer, I believe we will be developing a reputational layer on top, and all of the scoring scenarios and reputation points. And I believe that we will start to manage our reputation online by ourselves. So,
well, I think we're out of time now, but just to sum up very, very quickly, what, in one sentence, future of fintech, what do you think is going to happen in the next sort of 5 years or so, in one sentence? Put you on the spot there.
Cryptography.
Data.
Yeah, there we have it. Well, thank you very much, guys.
Thank you.
Thank you.
Thank you, Michael.
Oh.